Welcome back to Bitcoin Advisors, bringing it to you here from Westlake Village, California. It's been a while. I've made some sound improvements I hope you enjoy. And this week is a week of reckoning, and I want to make a very aggressive statement. And on the 24th, you can expect something massive, and I'll let you know why that is a little bit later in this video. And please go ahead and like and subscribe the channel. Okay, so what I want to start off here is the Fear and Greed Index. We're stuck at a 23. People are fearful as Bitcoin is going down 20% in the last week, testing the bottom side of our range here, coming in at, bottom side of the range here at 31,000, call it 31,100. 31,000 to the downside, and then we've got the top side of the range here coming in at 42,000 to the upside right here. Yeah, I would call it 42,000, and then to the upside. So we do very likely see Bitcoin dominance explode to the upside somewhere around 50%. It's coming in right here at 46. Could go into the low 50s at the culmination of whatever trending move we do see. So whether Bitcoin goes up or down, we do expect Bitcoin dominance to continue shooting up here. And what else do we see? We see open interest ticking down from 6 billion to 5.8 billion, which has me kind of thrown for a bit of a loop. And it gives a point into the bull's court. That means the move is more or less weak. If open interest is going down while price action is going down, move is more or less weak. However, what I do want to see open interest shoot up at least $1 billion alongside price action breaking the range, which I just spoke about, which again is 31,000 to the downside, and call it 40,000 to the upside. Now I would like to see that, and that would make me a lot more confident in calling a sustained trending move, either a break to the down or a melt to the upside. And right now I do think there are two scenarios to be going over. One of them is heavily bearish and the other is less bearish, not the most bullish at least. Of course, that can always change. As we do have the bi-weekly, monthly, do we have the bi-weekly coming up here? The bi-weekly, that's in 2 weeks. So we have the monthly and the quarterly and the 6 month all coming up. Those closures are coming at the end of this month. Now, what else do I want to talk about? So funding rates just went slightly negative while we're testing the bottom side of the range, which is what you want to see before a little bit of a bounce. So another point for the bulls. Now, let's get back onto our daily chart here, which is what we're going to be keeping an eye on today, because the closure today could be very, very seriously impacting to the doom or for the hopium case of Bitcoin heading back to the top side of the range. Now, what I did want to point out, the first chart I really want to look at is the 5-day here. The 5-day, which is a very powerful chart, gets the price action well. And what I do want to point out here, this would be redistribution classically, and we get a test back up into this cross. So any kind of a closure above this pivot right here at, call it 40,600 to the upside, I would extend a move back up to the top side, probably around 48,000. Okay. However, looks like we do want to test this Cyan 89 exponential moving average, as we have tested this now for the 4th time, 1, 2, 3. I would consider this a test. And the bulls are going to have to, if they're going to pull through and we see some kind of accumulation around this area over the next 3 to 4 months, it's going to look something like this, right? Where we get something like that. That's what we do. That's the best case for the bulls. So as long as we don't break below that region, I'm going to say that's the best possible thing for the bulls, right? Coming to the month of July, the more time we spend going sideways here, the better it is for the bulls. However, this cross we should note right here, which is the red 10 simple and the yellow 21. We have seen this 21-day exponential moving average. We have seen this cross several times in the past, and we can make targets lower based off of this cross if we do start to break below the Cme 89. How do we do that? Well, let's take a look here. This has happened a couple of times in the past where we get the cross, we test into the cross, and then we base around the Cme 89, and then boom, the thing breaks back down. Here is a previous example right here. So we get the cross, we test into the cross, and then boom, we end up basing off this purple 200 exponential moving average. Then another one right here, we get the cross, we come down, base around the Cme 89, get another bull trap, and then boom, we end up going all the way to the 377, breaking down. Let's go back a little further here. Another one, an instance here, we get the cross, base around the Cme 89, bull trap, and then down, back to the purple 200. And we can go back one more here and see this cross. We get the cross. Oh, that one's not so good. Is there any more? Can we find any more? No, not too much more there. Now, let's get back on to what else we want to talk about. Another thing, so this is the point in the bears court. You know, we've seen this similar price action in the past where we get that cross on the 5-day, base around the Cme 89. If we break below that cross, what happens? Most likely down. Something else I want to look at is traditional markets here. Now, I'm going to start off with the SPY futures on a weekly. And what happened last week is we did get a bearish engulfing candle here. This was last week's price action. And we are getting a bounce back up above that red 10, which I do like that. If we can close anywhere above the red 10, that'll be good. But ultimately, I'd be looking for this to come back down towards the yellow 21. That's a point in the bears if we do come back down. And then another way to judge this, the monthly, okay, if we can, a really easy trade, if SPY futures take out last month low, this thing is going to come down very hard. We do have 9 more days in the month. I don't think this is going to happen. Michael Burry calling the 2008 crash, calling for a massive bubble pop relatively soon. I'm not sure I'm on the same side as him right now. The Fed, I think, has a few more tricks up their sleeve. Another thing I want to look at here is Dixie, which is currently trading on the daily at 91.86. Very likely... very likely, I think we get a test up to that blue 377 moving average, and you know, I am expecting some more upside, but eventually I think we're going to get some downside because the dollar, there's no reason why the dollar should be exploding to the upside when they're printing all this money. So the last thing I want to bring up here today is the Bitcoin CME Futures, where all the professional traders trade. And I want to look at the daily. And this is the most concerning thing I would say. Now, we did get the bull trap. We did say a bounce. I was expecting a bounce up in the deeper 40,000, maybe 45 or 48,000. Maybe Bitcoin is weaker than I thought, but the nice part about this is our continuation point. If Bitcoin can close a daily back above 40,000, call it 41,000, just a tick above 41,000, that is going to be a major point in the bulls market and going to point to continuation. I'd look for a move actually back up to the $48,000 mark. Now, the most concerning thing we have right here, and it's very clear, is this bottom side Bollinger Band. If we close anywhere today below the bottom side Bollinger Band today, it's very, very likely to come to the downside, down towards, first, I'd say down to 28,000. And then probably continuation to fill the gap down to, call it 25,000. So if you had to put a gun to my head and say, Chris, what do you think's going to happen here? I'd say wait till the end of the day. Even actually, I'd say I'd call a bounce. I'd say we got 3 tests down to this blue box, this liquidity zone here. I think Bitcoin is stronger than everybody thinks. But the only thing that would bust my bias, and it would be a closure below this line right here at 33,000. So let's be keeping a close, keen eye on that. With that said, altcoins are going to do whatever Bitcoin does, and they're probably going to do it a lot more. Last thing I will take a peek at here is gold. Look at my gold. Gold getting a bounce here, higher lows. Let's take a look at the weekly. Higher lows on the weekly. We just had a higher high. I think that bodes well. I do think gold gets a bit of a bounce here, and that would help. That would kind of be in the Bitcoin side of the park, Bitcoin court. But right now, I would say, again, the ball is in the bears' court right now. And if they are going to do it, they're going to do it in the next 5 days. And the really easy way to judge that also on Bitcoin is this next 5-day closure. If we can close anywhere above this point right here at 35,588, call it 36,000, right? If we can reverse this wick, put in another wick here, I would say that is a major point, and we could get some more sideways action and maybe a little relief for a rally. Hopefully that dollar starts coming back down. So again, I want to leave you off with that. Be watching this daily today. We'll be watching the daily today, the 5-day, which closes on the 24th. And, I would say, again, if the bears are going to do it, they're going to do it now. If not, we'll give the bulls another chance. All right, I'll leave it off with that. Have a blessed day. Take care.